Hello, everyone, and welcome to this special Saturday educational webinar where today I want to talk to you about the 4 questions you must ask yourself before each trade. And I truly believe that if you ask yourself these 4 questions, regardless of what market you trade, regardless of what time frame, and regardless of what strategy, it doesn't even have to be one of my strategies or methods, it can be one of yours. I truly believe if you ask yourself these 4 questions, you will elevate your trading to the next level. So let me show you what I mean here. For example, let's take a chart to look at this older chart in Adobe, okay? Now, someone looking at this would say, well, I'm looking at the chart in just the last, time period, and I think we're in a downtrend because we've started to make lower highs and lower lows. So you say to yourself, okay, I would be a seller. But with what I'm going to be teaching you today, you would not have been in a downtrend at all. You would have known automatically that you're in an uptrend. Therefore, you would have been a buyer, you would have known where to place your stop, and you would have ultimately known where to place your exit, and potentially you could have captured 22.5 points. So this is what we're going to be talking about today, and I'll teach you what these 4 questions are that you must ask yourself before every trade. Now, everything I'm going to be showing you today is displayed using our platform, the PTS Primo charting platform that actually teaches traders how to trade. So welcome once again to this special Saturday webinar. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my presentations, I've been trading now for 47 years. Starting next month, it'll be 48 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. Specialist is someone who made markets in roughly about 50 or 60 stocks. So I made markets in stocks like IBM, Waste Management, US Air. I traded through the crash of '87 and the bull market that followed. So I've traded and seen just about every market environment, just about every trading method you can think of. So about 15 years ago, I teamed up with Pro Trader Strategies, and we developed Specialist Trading with one goal in mind, and that was simply to educate traders. And you'll see that in today's educational presentation, because our belief is if we can educate you, you can make your own trading decisions and therefore become a successful and consistent trader. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying these 4 questions, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company only, all examples, therefore, are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, please feel free to follow us on Twitter or X, however you'd like to call it. Every day I post between 5 or 7 different snapshots of methods or techniques or strategies that have generated signals. Also post a little bit of financial wisdom. So there's lots of great free education on a daily basis. There's our handle right there. You may want to copy that down. Also, this is being live streamed on YouTube right now. So if you're interested in seeing more and more content like what you're seeing right now via YouTube, please hit the subscribe button and we'll have a lot more content for you via YouTube, okay? Now remember, we are first and foremost an educational company. So we're not the kind of webinar where we'll tell you what we think the market's going to do, what we think the perfect stock is to buy or sell. That's not what a good mentor does. A good mentor simply teaches you how to trade. And once again, you'll see that going forward in today's educational presentation. Okay, so let's begin. And we're going to talk about what my mentors first taught me, because believe it or not, when I first started trading on the floor of the exchange, even though there was no access to the internet or high-speed computers or chat rooms or trading rooms, a lot of people would say, well, Steve, you were on the trading floor. You must have, had a license to steal. But my first year or two, I struggled tremendously. I was doing everything that probably most of you have been taught, looking for the news, the earnings estimates, the employment numbers coming out. I had tons of indicators on my screen. But here's what my mentor said to me. They said, Steve, trading is really simple. It's the trader, not some outside source, but the actual trader who makes it more difficult than it has to be. So if your trading is difficult or very complicated, it's most likely you that's making it that way. What my mentors taught me was to discard and let go of all of this, what they called useless information that I had piled up, and simply use the most basic things. And that's what will make you a consistent trader. It was hard for me to understand or realize at first, but once I did, that's when I started to become consistent. I let go of all the tons of indicators I was looking at. I stopped looking at news and earnings and things like that. And I still, to this day, do not concern myself with any outside sources like news or what someone's saying in a chat room or on TV. I simply focus on my trading plan, which is very simple and very basic. And that's what has sustained me now, going on 48 years starting next month. So hopefully be able to do the same for you. So if we're going to keep things simple, and we're going to not make it more difficult than it has to be, first thing we want to do is, in order to be consistent, we have to ask ourselves these 4 questions prior to any trade, all right? And remember, it does not matter what market you trade. You could trade crypto, currency pair. You could trade tick charts of the E-mini futures or monthly charts of stocks. It doesn't matter. Or doesn't matter if you're a long-term investor or a short-term trader. It makes no difference. But you have to ask yourself these 4 questions, okay? So here we go. Question number 1. Am I on the right side of the market? Now, this seems too simple to be true, right? Because everyone goes into a trade thinking you're on the right side of the market. But think of it. Whenever you lose money, whenever you have a trade that didn't work out well, you're actually on the wrong side of the market. You're not in sync with what the market wants to do. So that's what is the key to consistency. Just being in sync with the market, being on the right side. That's the first step. Now, everyone in the world has an idea of what it means to be in sync with the market and on the right side. But I'm going to share with you what I believe is the most powerful yet the simplest way to determine if you're on the right side of the market. You can start doing it as early as Monday. Okay? So let's look at our old friend Adobe and get used to this chart. We're going to be just using this for educational purposes only. Once again, someone who has never asked themselves these 4 questions would look and say, well, Steve, there's no real trend. It's hard to be on the right side of the market because we're going up, we're going back down, then we go back up again. But here's the first thing we teach our students. Always apply the 50-period moving average. If you're looking at a 5-minute chart, you have a 50-period moving average of the last 55 periods or 5-minute bars. If you're looking at a monthly chart, have a 50-period moving average of the last 50 monthly bars. It makes no difference, but you always have to have a 50-period moving average plotted on your screen. And then you ask yourself, where is price in relation to that 50-period simple moving average? Now, if price is below, the market, not me, not some guy in a chat room, the market is telling you that the overall trend is down. Now, if the overall trend is down, you should only have a seller's bias. Now, you can actually either stay out of the market entirely or look to go short. But you should never look to buy if you are below the 50. Now, conversely, as we see here in front of us, if price is above the 50 period, well, then we should have a buyer's bias. And that means we should only be looking for buy setups. Now, a few things clarification. This does not mean that simply because the bars are above the 50, that says, well, Steve says to go and buy at the market, right? No, you have to have some structure. You have to have a plan in place in the form of a strategy or a technique. But remember, always follow this rule. If price is below, have a seller's bias. If price is above, have a buyer's bias. Now, I know there may be some amazing bottoms made below the 50 or some amazing tops that go short above the 50, okay? But that is similar to the slot machines. I always say it's very similar to using the slot machines in Vegas because those slot machines are devised and they're designed to give you a win every once in a while, to give you this false sense of security, thinking, hey, I'm doing all right. You know, the bells and whistles go off. You hear some of the change fall into the tray and you think, okay, I'm on the right track. But they're designed to have you stay there because if you do it long enough, you're going to give it all back. You have terrible odds. It's no different if you're buying below the 50 and selling above the 50 to go short. Sure, you may have some tremendous wins every once in a while, but if you do that long enough, you'll give it all back. Trust me, take it from someone who traded that way some nearly 5 decades ago. And every time I'd have a good winner where I picked the bottom, about a month later, I'd give it all back. And the same thing when I went short above the 50, I'd give it all back. So we're trying to make consistent traders out of you. We're trying to put the odds in your favor. And the way you do this is by applying the 50-period simple moving average. If you don't believe me how powerful this simple tool is, go back and look at your last 10 or 20 trades. I can almost guarantee that the reason why you lost is because you were buying below the 50 and going short above the 50, okay? All right, so let's say you look at this chart and you go, okay, it's hard for me to really absorb off the beginning, but then you say, all right, I went back and did a little research and I guess you're right. So you decide, Well, here's a bullish engulfing pattern. I was thinking about shorting this, but now that Steve says price is above, I'll look to go long. So you decide to go long based off this engulfing pattern, and you'll buy if it trades just above the second bar in that pattern. Okay, well, you're in sync with the market, and you have a buy setup. This brings us now to question number 2, and that is this. Where do I place my initial stop? Now, most traders say, well, wait a minute, I thought, where do I get out with a profit? But that's the problem. See, you should always think in terms of what if I'm wrong? So you have to have some type of stop in place because you may be wrong. Now, in our courses, we give our students upwards of 6 or 7 different stop placements to choose from. But let me just share with you one of the most basic and most fundamental stops, and that's just a pivot low. In other words, if we were to buy here, what you do is you go back in time and find where the most recent low was. All right, now a pivot low is a 3-bar pattern. We have a low followed by a lower low and then a higher low. You make this kind of a V approach. So if we were to enter here somewhere in this area, we go back, this would be the most recent low. So this is where we're going to place our stop. A very basic way to protect yourself, okay? Now we go to question number 3. Now we can finally ask ourselves, what is my profit target? And the reason why we're asking that now is because we will develop our profit target and know exactly where it's going to be generated by applying our stop placement. Let me show you what I mean here. Okay, if we go long here at this point, but what if the trade turned around and we turned it into a loss? How many points, not how many dollars, but how many points would we be risking or losing? Well, we lose 11.25 points, okay? So that's how many points we're risking. So what you want to do is double that amount. In order to have a good risk-reward ratio, you want to make at least twice what you're willing to risk. So if we're going to be risking 11.25 points, we simply double that and add it from our entry point. So 11.25 times 2 would be 22.5. We add it from where we would be entering, and that is our exit place. So now, out these first 3 questions, we know where we're entering, we know where we're getting out if we're wrong, and we know where we're getting out if we're right. Very simple. Now, this is just one of the exit plans, once again, that we teach in our courses. We have upwards of 6 or 7 as well. This is just one very basic way. And then we go to the last one, question number 4, which is, how do I protect my profits? Now, why would you want to protect your profit? Well, everyone knows it is the worst feeling in the world to have a trade going your way and you feel very comfortable about it, whether you're day trading or whether you're position trading or for the long term, and then have that at one time positive trade turn into a loss. It's the worst feeling in the world because you knew you had money on paper in your favor, but now it's turned into a major loss. And now you most likely have to hope and pray for it to come back just to break even. We've all been there, right? So we have to protect our profit, even if it's on paper. The way we do this is by applying our 50% rule. Now, what does that mean? Well, if we were to enter here at 224.50, and if the trade worked out in our favor, and we were to exit here at 247, what we want to do is measure the halfway point or the 50% level, which is right here. And so the 50% rule works this way. If we get at, near, or above this level, what we want to do is cancel this stop and move it to unchanged, okay? So this is how we're going to protect ourselves. So this means that if we get to the half point level and all of a sudden some news comes out or something terrible happens and it goes down, rather than having 11.25 point loss on our hands, what we're going to do is simply break even. So let's see how the trade unfolds, okay? Nothing happened yet, but on the 3rd bar, we entered. So now we're into the trade. We have our exit in place, our stop placement, and we just simply wait and watch. And ultimately, we get to that half level, okay? So what do? We cancel this stop and we move it up to entry price or unchanged. So basically now we're playing with the house's money. We have no risk. We have nothing to lose. So here comes the most basic part of trading. The only thing left to do is simply watch the trade unfold. I always tell my students, if you are trading correctly, it's actually very boring. It's like fishing. You go out in the boat, you cast your line, and you just wait. That's it. It's no different. Trading is the same way. You have your entry in there. Now, once you're in, you already have your exit, your stop placement. You know where the 50% level is. You just wait. Okay, if you're yelling and screaming on 2 or 3 phones at a time, if you have 3 or 4 monitors in front of you with tons of indicators and watching 2 TVs and watching what's going on fundamentally in the news, you're overcomplicating your trading once again. Remember, it's the trader that makes trading more difficult than it has to be. I have one screen in front of me. I don't watch news. Most of the time I have music in the background or I'm listening to or watching a movie, and that's it. I put my plan in place and that's all I do. This is the correct way to trade. So let's see how the trade unfolded. Remember, there's nothing for you to do, just to sit back and watch. Well, as we watch the first couple of bars, we see that it's starting to go our way, but then it pulls back and now it's going lower. But that's okay. We're simply waiting. We have no loss in place. And ultimately, we got up to that exit point and exited with a 22.5 point gain. See how simple that is? This is the basics of trading, just using these 4 simple questions that you must ask yourself. Remember, it doesn't matter what strategy, it doesn't matter what your exit point is or your stop placement, but ask yourself these questions in advance. Most traders don't do that. They ask themselves, well, where am I going to get out? Well, I'll kind of figure that out as we go along. As the trade is unfolding, I'll see how the market's acting. That's not the way to trade. That would be similar to someone flying a jet airline and saying, well, I'll figure out how to land this or how to fly this as we go along. You know, I'll figure that out once we're in the air. I mean, you would never want to fly with that person, right? But for some reason, traders think it's perfectly okay to trade this way. No, you have to have a plan in place. And most of the time, your orders have to be already entered even before you've entered the trade. Let's look at another example, okay, using these 4 questions. All right, here's an older chart of Fissler, FSLR. Let's say you're a technician. You know, you like to use technical analysis 101, okay? And you say to yourself, Steve, I look at all the technical analysis, I've studied it, and this is a major bullish wedge. So what this means is, using a fundamental analysis, if we close above here, this little downward trend, that means we're most likely going to at least come up to these old highs or make new highs. So I'm really bullish on this stock. So I'm going to wait to see what happens. Okay, that's your plan. All right. And look what happens. The very next bar, we close above. So you're excited, you jump in and you buy at the market, right? Well, not really, because what is the first question you have to ask yourself? It doesn't matter if you want to use technical analysis or fundamental analysis, but you have to ask yourself the question that we taught you already. And that is, am I on the right side of the market? See, it's okay, whatever plan you use, but you have to make sure you're on the right side of the market. And how do we find that out? Well, we don't look at different time frames. We don't look at higher highs, higher lows. We don't look at moving average crossovers. All we look at is the 50-period moving average. And then we ask ourselves, where is price in relation to that? Now, initially we were above, but look what happened. The last 1, 2, 3, 4, 5, 6, 7 bars were below the 50-period moving average. So that's more than enough to tell us that the overall trend is down. I don't care if you have some fantastic system that tells you to buy. If you are below the 50, the odds are against you that it will work out. Remember, go back and look at your last 10, 20 trades. You can almost see that where you had losses. You were out of sync with this simple rule. So rather than buying, you would not have been a buyer at all. You say to yourself, okay, well, if I'm looking at technical analysis, I guess what we have here is some type of ledge or support, because look what happened. I'm glad I didn't buy, and you're right. I would have lost money. So here's a so-called ledge or support. If we break that, I will sell. Okay. All right. I mean, I'm not saying that that's going to work, but at least you're in sync, excuse me, with the overall trend, and the odds are in your favor. Which leads us to question number 2, though. We all know that not every trade is a winner. So where do I place my initial stop? What if you're wrong? Once again, we have multitudes of different stop placements to choose from people that have a lot of capital to work with, so they want larger risks, to people that don't have a lot of capital that would like smaller risks. You choose, because as a mentor, our job is to provide you with these different things. But let's just use a very basic one again. We'll go back and look at the most recent high. So if we were to enter here, we go back in time, and here's the most recent high, that 3-bar pattern. So we'll place our stop here, okay? Now we go to question number 3. What is my profit target? Well, this is where the stop once again comes into play, because if we were to enter here to go short, and if we were going to be stopped out here, how many points would I be losing? In this case, we would lose 8.20 points. Now, You can decide for yourself, even before the trade has been triggered, wow, can I risk that amount of points? Do I have enough capital? Or I don't want to risk 8.20 points. If that's fine, then take the trade. You see how this is all being decided before you even enter into the trade, okay? So if we're going to risk 8.20 points, what we want to do is subtract that amount, double it, and subtract it from where we'd enter. So that would be 16.40 points. And this would be where we would exit the short trade at 51.15. All right, so we know even before we've entered the trade where we're going to enter, where we're going to get out if we're stopped out, and where we're going to get out if we have a profit. This is all before we've even pulled the trigger. Which leads us to the fourth and final question: how do I protect my profits? Once again, we apply the 50% rule. If I went short or bought the puts right here, and if I got out here at a profit, once we get halfway, the distance, I want to move this stop to unchanged, because if this all of a sudden turns around and goes all the way back up, I would hate to have a winner turn into a loser. So let's watch the trade unfold. Okay, it's going in our direction. Wow, now it's really going in our direction. And ultimately, it hit that halfway point. So now I'm going to cancel this stop and move it to unchanged. So now, once again, I'm playing with the house money. I have nothing to risk. If some reason the stock goes straight up, I'll break even. Okay. Now remember, the only thing left to do is to watch the trade unfold. We're fishing once again. We're not yelling and screaming. We're not looking and waiting for the earnings to come out. We just sit back and wait. This is the way trading was meant to be. So the trade ultimately is going in our favor. And it didn't take long for it to hit that point where we made 16.5 points. Once again, just by simply taking control of our trading, not depending on an outside source like a news event or some guy in a trading room or some guy on TV telling us what to do. We are in charge of our own trading. In my nearly 5 decades of trading, the only traders who are still around from my days on the floor that haven't been wiped out are the ones that make their own trading decisions. They don't go to a chat room. They don't wait with bated breath for every fundamental economic announcement to come out. They simply have a simple plan in place and they follow it. So these are the 4 questions you must ask yourself before each and every trade. You can start using this technique or this method as early as Monday. Now, we have a great offer for all of you attending our special Saturday class today. Now, we realize that this technique is great, but how would you like to have many more techniques that are not even related to what I just taught you? Totally different, but can elevate your trading and take you to the next level. We have a great Saturday special offer for all of you taking time out of your weekend to come attend this webinar. This is called our Trading Floor Edges course. This is actually a 10-video course which covers over 47 years of trading experience, things that I've accumulated from my days on the trading floor that you actually won't find anywhere else. You won't find on any major platform in any major course because they actually come from the floor. More high probability trading edges, 2 techniques that will elevate your trading. Once again, how to be in sync with the overall trend, 4 separate but distinct ways on how to be in sync with the overall trend. 3 steps to a successful trade. A large portion of this covers on how to fine-tune your entries. Most likely, a lot of traders feel that their system or their strategy is faulty. Most likely, it has to do with your entries, or it could be your exiting techniques. So we'll take you to the next level in exiting techniques. And everything I'm going to be sharing with you in this 10-video course can be applied to any market and any time frame. But here's one of the best things I cover, in my opinion. It's a superior candlestick trading edge. I know most likely most of you at one time or are currently using candlestick patterns to trade with. The majority of people do. It's my opinion that most people are using them incorrectly. And I'll show you a superior candlestick trading edge. For example, let's take a look here at this chart in PLTR. Now, the way candlestick patterns usually work is they are reversal patterns. So you look for a trend, and then you look for a specific pattern to tell you that that trend is going to reverse. Now, obviously, we're in an uptrend here, right? So we would be looking, if we're traditional candlestick traders, we'd be looking for a reversal pattern. And what do we have here? We have a dark cloud cover pattern, which is a negative pattern. And then days later, it's followed by another negative pattern, a bearish engulfing pattern. So these are 2 signs that the market, through candlestick patterns, are telling you this is going to reverse. It's time to sell. So if you're a traditional candle pattern trader, you would have sold right here. And this is what would most likely have happened to you, right? This is why I feel most traders use candlestick patterns incorrectly. What I'll be teaching you in this 10 video course is that you would not have sold right here at all. Using a higher level candlestick pattern, a trading edge, you would have actually gone long the day before and potentially been able to take advantage of that nice run up. So you would not have sold, you actually would have been a buyer. And so this will be covered in detail, the superior candlestick trading edge. This is included as well in the floor traders, trading floor edges course. Now, let's break it down. Normally, on my sister site, Pro Trader Strategies website, this course goes for close to $1,000. That's because it's jam-packed with information that, as I said before, it's taken me nearly 5 decades to accumulate. Here's what we're going to do for all of you taking time out of your Saturday. We're going to discount this down to only $19. $19, but that is for a very limited time only, probably till the end of the weekend. Okay, it's just our way of saying thank you for the end of the year. We wanted to have this special Saturday webinar. We don't usually do webinars on a Saturday, but we wanted to do this to conclude the year, to take your trading to the next level, and to introduce ourselves to all our new students as well, our prospective students. So we want to give you this really deep discount of only $19. But guess what? We're not going to stop there. We're also going to throw in an extra bonus. So along with your purchase of the Trading Edges course for only $19, we will include a 50% discount on any other product we sell. So it could be a strategy. It could be an indicator. It could be our platform. You will get half off no matter what, simply by taking the time to spend $19 on this course, 10 video course, that I truly believe will take your trading to the next level. You owe it to yourself to take your trading to the next level. Why? Because most likely you invest or you follow someone else to take yourself to the next level. Invest in yourself. Learn these techniques so that you can be in charge of your trading. When students come to specialist trading, we teach them all these high probability, very consistent methods, but then that's it. There's no reason for you to stick around anymore. We want you to be in charge of your trading. That's our philosophy behind education, because a good mentor does not trade for you by giving you signals every night to take or tell you automatically what's to buy or sell when it spits it out on the platform. No, it's you who are in charge, and that's our only goal, to make you in charge of your trading, to put the power back in your hands. So invest in yourself. $19. I think most of you couldn't go out to breakfast this morning for less than $20, $25. So $19, you're getting nearly 5 decades of information that I've accumulated. It's taken me that long, okay? So here's how to take advantage of this. Contact my sister site, which is Pro Trader Strategies. I would highly recommend giving them a call here at this number, 310-598-6677. They have trading consultants manning the floors. They would be the phones, I should say. They would be more than happy to answer and take your order over the phone, or just answer any question you may have. Now, that link you see at the very bottom is the link that will take you to the info page. You can sign up online as well. It's not a live link, but if you go to the little chat box, you see that little chat icon there, just click that on and you'll see a live link has been posted on there. So you can just click that on, okay? I'm gonna leave this information up here. I'll answer any question you may have. Just go to the chat box or to the question and answer box. I'll answer them to the best of my ability. I already see we have one. When purchased, is this course mailed to me or is it downloaded? No, this is all, actually it's emailed to you. You will get a link to all these recordings. So there's nothing you have to wait in the mail for. You can be watching these 10 videos as early as today. That's how quickly it can be. And once again, for $19, you can't beat that deal, and it's yours to keep. Someone's saying, is this only good for 6 months? And I mean the videos, or does it do the videos expire after that? No, the videos are yours for life. In other words, you have the downloaded link. You can watch these videos, and once you watch them, they're yours. So you can always get a refresher course. Say they help you tremendously and you're consistent for a couple of years, but you want to go back. Well, you can always go back because it's yours. These 10 videos that are normally worth $1,000 are yours for $19. But remember, this is for a limited time only, okay? Next question, can this be applied to intraday E-mini futures? Yes. As I said earlier, all of the techniques we teach can be applied to any market and any time frame because the consistency is universal. It makes no difference as I said, if you're looking at a 2-minute chart of the E-mini futures, or if you're looking at a monthly chart of NVIDIA, it absolutely makes no difference. Where a signal is generated, a signal will be generated in all, okay? So don't worry about, well, I bought this other $10,000 system before and it only worked in a certain market or a certain time frame. No, for $19, you can start applying these tools and techniques on any market and any time frame, okay? Once again, these are things that I've taken from the floor that you won't find anywhere else. You won't find on the major platforms, or you won't find in any of the courses, because this is from my experience on trading the floor, as well as that super edge and candlestick trading. That is a really great way to take your candlestick trading up to a new level, okay? How long does this last for? As I said, it's a super discount, going from nearly $1,000 down to 19. I would say probably no longer than this weekend. So, like I said, you can't go out to breakfast for less than $20, $25 these days. So for 19, you're getting nearly 5 decades of information that I've accumulated. Take advantage of this. For $19, it'll be your Christmas gift to yourself, your holiday gift to yourself, but it's a great way to get your trading back on board, okay? All right, if there are no further questions, I just want to say thanks for taking time out of your Saturday. I hope you learned something. As I said, we don't have Saturday webinars. We just wanted to give our students and prospective students a gift, a holiday gift for $19. I think this is probably the best gift you'll be giving yourself. So come on board. And one last thing I also wanted to mention, if you have a question for anything in the 10 videos, you will all get my personal email address. So this is access to me personally. It does not go to another trader. It does not go to an assistant or to a salesperson. They only come directly to me. You can email me over the weekend. I was already answering questions by some of our students. You can email me prior to the opening, after the close. It makes no difference, and I'll be there right away to answer any question you may have if something doesn't make sense, okay? But it's extremely simple. If you thought today was simple, what I taught you today, you'll see how powerful but simple the things are in the 10 video course. Okay, with that said, I just want to say thank you once again. I wish you all the best of luck in trading. And as we take one last look at our disclaimer, I just want to say thanks for taking time out of your Saturday, but I look forward to all of you and seeing you all in class in this 10 video course, okay? Thank you so much. Have some great holidays, and I'll see you next time. Bye-bye.